Hey there, Jimmy Roberts with Renaissance Appraisal, and today we're going to talk about a call that I get a lot. This call is really starting to ramp up, and it has to do with private mortgage insurance, or more specifically, homeowners attempting to remove private mortgage insurance. So let me take a step back. What is private mortgage insurance? Well, plain and simple, private mortgage insurance is insurance that you are required to have if you have a mortgage, if you have a mortgage and you put less than 20% down on when you purchased your property. So for instance, let's say you're going to buy a property for $100,000 and you only have $5,000 to put down as a down payment. All right. That means you're going to have a 95% LTV loan, right? Because the other 95,000 is going to come from your lender, loan to value, right? So if we had that situation, what's going to happen is, in addition to whatever rate you're going to pay for the mortgage, there's also going to be a requirement that you pay an additional amount of money to pay for insurance to protect your lender about that gap between $80,000 and the $95,000 that you owe. Okay. Now, in some cases, that gap insurance, essentially, it costs as much as $200 to $300 a month, depending on your home and depending on the value of your home, right? So, heck, let's call it what it is. I'd rather have that money in my pocket. I'm sure you would too, right? So what homeowners have been doing as of late is they've been giving us a call here at Renaissance Appraisal and saying, "Hey, Jim, we want you to come on out. We need to." Our mortgage officer said, "Hey, just get an appraisal, and if the values work out, they'll remove the insurance." Again, just by simply getting a value to prove that your home has increased in value, you can reduce your out-of-pocket monthly expense by $200 to $300 a month. Why wouldn't you do that? Homeowners are trying to do that right now. Now, here's the challenge that we're finding though. I'm getting that call a lot from people who purchased their home back in 2022. Now, 2022 was a good year, but we had some challenges that came shortly after 2022, right? Because beginning of 2023, as you guys may remember, interest rates skyrocketed, right? Pretty much putting the cap on our exploding housing market. And while home prices still went up, let's call it what it is, they didn't go up like they did before. For instance, in the city of Warren in Macomb for 2023, they saw a home for residential properties, they saw an average increase of 4.22%. That's 4.22% increase. Now, generally speaking, a market is said to be stable if it's within plus or minus 3%. So if it goes up 3% or if it goes down 3%, that is still considered stable. So for our purposes, essentially, we're saying that at least in Macomb, home values were pretty stable. That's a great thing, right? That's kind of what we were looking for, ultimately. Well, again, going back to our example, if you purchased your home in 2022 and you put 5% down and now you saw a 4% increase, well, now let's just add those up. Let's say that 5% plus that 4% means that now maybe your since the home value went up, maybe you got about a 10% worth of equity there. Right after all the funny math there is all done. Well, 10% is still less than 20%, right? You need to be below 20% to get rid of the PMI. So these homeowners are coming to me and saying, "Jimmy, I need to get this appraisal so that I can prove that my home values has increased so I can get rid of this PMI." And unfortunately, oftentimes what I'm finding myself doing is having some interesting conversations beforehand. For instance, some of the questions that I ask is, "Hey, okay, I see that you bought this home in 2022. Home values haven't gone down necessarily, but they haven't shot up at the rate that they were back in 2021, 2020. So I have to ask you this question. Have you done anything to the home to improve, to force appreciation? Such as, have you renovated the bathroom? Have you renovated the kitchen? Have you replaced roofing? Have you done anything to make this property more valuable? You yourself, not relying on the market, you yourself, have you done anything? And oftentimes, a lot of homeowners are like, no, I haven't. I've painted and I've changed the carpeting and done a few other things, but I haven't really done any major things. So it's at that point, then we start to have some other conversations like, we can take a look and I'm happy to come out. But I want you to understand, we as appraisers just report the news. Meaning we only tell you what the value of your home is based on what's going on in the market. And from what you're telling me, it doesn't sound like you've done much to aggressively affect the value of those properties. And if that's the case, you might not see the results that you want. And 9 times out of 10, they're like, okay, fine, come out anyway. I still need to know. And that's great. That's great. But for that 1 out of 10, we're looking to save people time, energy, and money. Because I don't want to, at least in our business, we don't want to take your money just to take your money. We want to make sure that we're providing some value for you. So, that said, PMI removal is one of the things that we are increasingly getting a lot of calls for. So we just talked about a situation where it probably would not be such a good idea to give us a call and try to get that PMI removed. But here's another one that will. If you purchased your home back in 2021 or before, there you've got a really good shot to see some PMI reductions if you are able to affect that. Plain and simple, and all it takes in most cases is simply a professional appraisal, and they'll get that money back into your pocket. So there you have it, how to use our newly released real estate data for 2023 so we can put some more money back in your pocket by getting rid of the PMI on your mortgage. Alrighty, this is Jimmy Roberts, your local real estate professional, and I will see you in the next video. See ya.